Andrew Su is CEO of Compass Global Markets, one of Australia's largest foreign exchange brokerages. Andrew, thank you very much indeed for joining us. Has this move by the yen surprised you by its magnitude?
It has surprised us, but I don't think it's particularly in relation to the asset purchases in itself. I think what we've seen is a confluence of factors that has led to this rise, and that has largely been that volatility in the G7 currencies has fallen to 3-year lows. In that environment, high-yielding currencies are very much in favour from investors and speculators who are looking for higher returns. So what we've seen is, I think, the asset purchase increase has affected the markets in such a way that it has triggered a lot of stop losses, and people are now starting to move back into the carry trade. So because volatility is at an all-time low, people are now willing to punt on the euro against the yen, the Aussie against the yen, just for the interest rate differential. And what we've seen is upwards of 10% moves in those crosses over the last couple of months.
Okay, so, have you ripped up your targets for the year now as far as the yen goes, and do you think other people are going to be doing that anyway?
They may be, but we're certainly not. A lot of our forecasts are based on a rapid deterioration of the situation in Europe, which is yet to occur. Now, if Greece survives this year, and if we see a rapid improvement in things like the bond yields in Spain and in Italy, then we may have to rip our forecast. But at the moment, we see this as a selling opportunity in terms of the crosses against the yen, and we'll see dollar yen below 80 very, very shortly, probably in the next couple of weeks.
All right, okay. Well, what about the the view at the moment that the American economy's got growth, and they've got actually perhaps even sustainable growth now as well? How's that affecting things?
Well, look, I think the effect on the currencies will be such that the likelihood of quantitative easing is falling quite rapidly, and that means that all this built-in tension in terms of the selling of US dollars because of the belief that there will be more quantitative easing will start to unwind, and what we'll actually see is the US dollar increasing over the next few months because of that. Okay,
so what are your targets then when we look at it? Where will we be against the yen? Where will the dollar be against the euro?
If we're talking about a 6-month target, we're still targeting 126 on the euro. We're targeting 78 against the dollar yen, and the Australian dollar I think will suffer the most, and we see it below parity within the next 3 or 4 months.